Hello there, Susan Njuguna here, and as always, I'm here to talk about money. And today we are diving deep into a topic that is very crucial for a Kenyan investor, and that is money market fund. And our focus today is how to choose the best money market fund. And in my previous videos, two of them, we covered the basics of money market funds. And if you have not watched that video, I would recommend that you watch that video first because it lays the foundation of this video. And there are some things that we discussed there that we are going to expound here. So if you have not watched it, please watch it. We covered very interesting things there, including what would happen to your money if the company that you have opened an account with went out of business. So make sure you watch it. Now we are taking it a step further from the basics, and by the end of this video, you'll be equipped with all the knowledge you need to make an informed decision about which money market fund is best for you. So let's get started. Why is choosing the right money market fund matters? So before we jump into the nitty-gritties, let's talk about why this decision is so important. Picking the right money market fund can mean the difference between maximizing your returns, keeping your money safe and secure, having easy access to your funds when you need them, because it's very important to have that. Then, last but not least, achieving peace of mind about your investments. And this last point is very crucial. When you choose the right money market fund, you can sleep easy knowing, your money is working for you in a safe, regulated environment. So let's break down exactly what you need to look for when choosing a money market fund here in Kenya. And number one, you need to assess the fund manager reputation. And let's be clear, first things first, the fund manager plays a very crucial role in the success of the money market fund. And here are a few things that you need to consider when you're looking at the reputation of a fund manager. Number one, you need to look at the licensing and regulations. Um, you need to ensure that the fund manager is licensed by the Capital Market Authority, CMA. And this is a non-negotiable, guys. It's your first line of defense against fraud. So make sure that you check whether that money market fund is licensed, that fund manager is licensed by the Capital Market Authority, CMA. Then you also need to look at the experience and the track record. You need to look at the fund manager's experience, how long they have been managing money market funds, and what is their overall track record. And I'm going to mention something very important, a note, where it's generally wise to invest with fund managers who have been in existence for a long time. Don't overlook newer fund managers. In fact, I know some new fund managers are offering better returns than their more established counterparts. And the reason for this is because new fund managers often are more aggressive in seeking out high yield investments just to establish themselves in the market. They might be having technologies that are, they are newer, and this reduces the cost of operations, and they want to attract customers as unlike the established organizations who have already a clientele base, so they don't need to attract more customers because they know they have that. So these newer companies they're offering more returns so that they can attract more customers. So one thing I want you to do is to be cautious of returns that seems too good to be true. If a new fund is offering significantly higher returns than the market average, that could be a very big red flag. So my advice is try to diversify your portfolio. Consider having a mix of both established and newer fund managers. So for your long-term investment, it's generally safer to go with fund managers who have been in the game for a while, because they have weathered different market conditions, and they have proven their stability in the market. And for your short-term investment or a portion of your portfolio, you might consider newer fund managers, but only if they meet these criteria. They should be licensed by the CMA. They should have reputable trustees and custodians in place. And if you don't know what trustees and custodians are, you need to watch the videos. You can click here and just watch those videos. That video, the basics of money market funds, because we discussed about trustees and custodians. And then the fund managers, the newer fund managers, they should have a clean reputation in the market. Yeah, so remember, with newer fund managers, start with a small amounts until you're comfortable with their performance and operational, and then you can increase the amount in that money market fund. But you can start with a small amount, and then you can increase from there after assessing them and seeing how stable they are. So make sure that you research the company behind the fund. Is it a well-established financial institution? What is their reputation in the market? That is very important. So number two thing that you need to consider when choosing the best money market fund for you is to evaluate liquidity and accessibility. So you know, and we have mentioned this before, one of the key benefits of money market fund is their liquidity. There is at which you get your money, and you need to consider a few things under liquidity. Yeah, you need to consider the withdrawal process. How easy is it to withdraw your money from that account? You need to look for funds that offer quick and easy withdrawal processes. For instance, a fund that allows you to withdraw your money within maybe 1 to 2 business days and doesn't charge exit fees is, generally more attractive than the one with a longer withdrawal period or maybe hefty exit fees. Yeah. So check on that, the withdrawal process. And this is something that you can get when you call them before you open an account. Then you also need to look at the minimum investment or and additional contributions. So what is the amount required to start investing in this money market fund account? And how much do you need to make additional contributions? Because I know there are most of these companies, they have a minimum limit. So if you don't have more than what their minimum is, you can't open an account there. So that is also something that you need to consider. And a fund that allows you to start with a small amount, like maybe 5,000, 1,000, or even 100. And also you can also make small additional contributions like 1,500 or 100. This can be a very great way for you to build a saving habit and also investment habit, because I know it's very hard when you're starting, and sometimes you'll feel like it's too much, it's not enough. But for a fund that offers you an option to even save 500, 100, just to get that momentum of saving and investing, you can start with that money market fund. Yeah. So you also need to assess the technology and accessibility of that money market fund. And I mean, in today's digital age, look for a fund that offers user-friendly mobile application or an online platform. And because being able to check your balance, make investments, and request withdraw from your phone can make managing your money much, much, much easier. So number three thing that you need to look for is look at the customer service and support. Yeah, good customer service can make a very big difference in your investment experience. You need to consider the responsiveness. How quickly does the fund manager respond to your queries? Do they have a dedicated customer service line? So make sure that you call them before opening an account and assess this yourself. Okay. And then number four, which is last but not least, because this is very important, consider your personal financial goals. And I'll say this: my best money market fund is not might not be your best money market fund, because we all have different goals and we all have different financial needs, okay, or financial stand. So remember, the best money market fund is the one that aligns with your personal financial goals. And maybe you can write this down. Some questions you can ask yourself to know your financial goals. And the question number one is, what am I saving for? Is it short-term goals or is it long-term wealth building? That can help you understand where your financial goals. And then you can also ask yourself, how much risk am I comfortable with? So if what is your risk tolerance? Yes, and this can guide you in which money market fund you can open. And then the last question you can ask yourself: how much can I realistically invest regularly? So if you can realistically you can be able to maybe have 5,000 per month or 100 per month. That will guide you on which money market fund you can open. So your answers to these three questions will help guiding you on your choice. Okay. So choosing the best money market fund in Kenya comes down to carefully considering all these factors, the four factors that I've mentioned and have expounded each one of them. Remember, it's not just about chasing the highest returns. It's about finding a balance between good returns, safety, accessibility, and alignment with your financial goals. And here is a quick checklist to help you make your decision. You can write this down. Number one, verify the fund manager credential and reputation. Then number two, you need to evaluate liquidity and accessibility. Number three, assess customer service quality. And then number four, align the fund with your personal financial goals. Those are the four things that we have covered. So make sure that you carefully consider each of these factors and you will be well on your way to choosing the best money market fund for your needs. And I'm going to leave you the pro tip about money market fund or investing in money market funds. When investing in a money market fund, consider diversifying your investment across different money market funds that have different custodians. And again, if you don't know what custodians are, you're missing out. Watch my previous two videos, the previous two videos that I posted on my YouTube, on my channel. Why is this important? It's because custodians are typically the ones that hold actual investment of the fund. And by spreading your money across funds with different custodians, you are adding like an extra layer to your security to your portfolio. This is called diversification. So what would happen is this will give you peace because you don't have all your money in the same place. And if you watched my previous video, we said that money market funds are already diversified. So you even diversifying your portfolio makes it even more secure, and it's going to give you peace of mind. Let me give you an example. If you're investing like 500,000 Kenya shillings in a money market fund, you might split it between 2 or 3 funds that use different custodians. And this strategy can help mitigate risk and give you peace of mind, because even if money market funds are regulated, if, for example, a fund manager went out of business, it will take time before the whole process of maybe transferring that money to a different fund manager or making sure that all the investors have received their money. It would take some time. And if you had all your money in the same place, this would give you a lot of stress. And we don't want you to have stress because of the money that you have already earned. So make sure that you diversify. As we earn, we also ensure that we have some mitigation in place. So last, I want to mention that investing is a journey, not a destination. And start with what you can, start with what you have. Keep learning and don't be afraid to adjust your strategy as your needs change. And please don't listen to people. Your strategy is the best strategy. Those people who are discouraging you, telling you that the amount that you are getting in a money market fund is too small, start with what you have. It is your journey. It is your journey, okay? So if you found this guide helpful, don't forget to like and subscribe to our channel for more financial tips and insights. And as always, if you have any question, drop them in the comments section below. I love hearing from you guys. Also, make sure that you share this with your friends, because we want to enlighten our friends also. Thank you for watching, and here's to making smart investment choices. See you in my next video. Bye.